Hello, my name is Elena Voyla and I am a member of the Management Commentary Project team at the IASB. Welcome to the series of webcasts on management commentary, which is a narrative report that accompanies financial statements, helping to explain those financial statements and providing insights into the company's prospects. The board published the Management Commentary Exposure Draft in May 2021. The exposure draft sets out the board's proposals for a comprehensive new framework for preparing management commentary, and it is open for comments until 23 November 2021. In this series of webcasts, we will answer some of the frequently asked questions on the proposals, such as what does the board mean by value creation? Why does the board propose an objectives-based approach? And how does it relate to the board's proposed pilot approach to disclosure in IFRS standards? What are the key matters and how do they relate to the materiality concept? And why does some of the terminology in the exposure draft differ from the conceptual framework? In this first webcast, I will talk about the board's reasons for working on management commentary projects. When we discuss the exposure draft with stakeholders, we often get a question about why the board is doing the project on management commentary, given that many jurisdictions have their own requirements for preparing a management commentary or a similar report. We also get questions about why the board is doing the project now, given broader developments in sustainability reporting, in particular the work of the IFRS Foundation trustees on considering the creation of a new international sustainability standards board. So let me start by explaining the board's reasons for starting the project. The board heard from investors that management commentaries do not quite do the traditional job that they are meant to do. One common frustration is that the reports are too long and provide too much generic boilerplate information and not enough company-specific information. They do not tell the company's story, nor do they focus on matters important to the company's prospects. Investors also tell us that management commentaries focus on short-term and provide insufficient information about matters that could affect the company's long-term prospects, such as strategic challenges facing the business. The reports can also be fragmented, difficult to reconcile to the company's financial statements, and biased towards good news. So it is addressing these pervasive gaps in practice that is at the heart of this project. In addition to that, for many companies, intangibles and sustainability matters increasingly affect their enterprise value, and investors call for better information about those matters. Of course, the board acknowledges that these matters are important, and the exposure draft requires companies to include material information about sustainability matters in management commentary. However, management commentary is not limited to sustainability matters. Its scope is broader. So what the board aims to achieve in this project is to meet global capital market needs and to offer a solution that will facilitate high-quality, globally consistent narrative reporting. In the exposure draft, the board is proposing a comprehensive new framework aimed at improving information in a management commentary. The board's goal is to design a framework that would be flexible enough to allow management to tell the company's unique story, because this is what investors want to hear. And at the same time, the board is seeking to bring rigor and discipline to narrative reporting, so that to enable assessment of compliance by regulators and auditors, and to improve trust in narrative reporting. Finally, the board recognizes that in some cases, companies might apply the proposed new framework alongside local requirements. So it is also important to the board to design a framework that would be compatible with local laws and regulations. For example, the proposed framework would allow companies to include in management commentary information required by local requirements, even if that information would not be material applying the board's requirements, as long as that information does not obscure material information. This takes me to the question of who would apply the new framework and why. As I've just mentioned, the board recognizes that many jurisdictions have their own local laws and regulations for preparing management commentary or a similar report. Those requirements differ in the level of detail. Some specify only general requirements, such as to describe a company's business model or strategy, while others are more specific in setting the requirements. However, given investors' call for better information, the board felt that it can contribute to this evolving area of narrative reporting. The board's aim is to offer a global solution. The new framework consolidates recent innovations in narrative reporting and seeks to address pervasive gaps in practice. Once the proposals are finalized, it would be for local regulators to decide whether the new framework is of interest for their jurisdiction. They might choose to adopt the new framework in full. They could also choose to adapt it for application in their jurisdiction, for example, by including additional requirements to achieve jurisdiction-specific objectives, or by choosing to incorporate some of the proposed requirements or guidance in local regulation. Or they could choose not to take any action. The board hopes that it has a valuable product to offer. Initial feedback from investors on the proposals has been positive. Investors indicate that the proposals could address their main concerns. So the board hopes that the revised framework will act as a catalyst for change and help raise the bar in narrative reporting. Another question that we often get is about the interaction between the board's proposals in this project and sustainability-related initiatives, in particular the IFRS Foundation trustees' work on the proposed new sister board for the IASB, the IASB. To answer this question, let me first recap how the board proposals cover reporting on sustainability matters. As I explained earlier, one of the board's reasons for starting this project was to respond to calls from investors for better information on sustainability matters, because of the increasing impact of those matters on enterprise value. The board has not prescribed which sustainability matters need to be discussed in a management commentary. However, the proposals require companies to identify key sustainability matters and to provide information about them that is material to investors. To identify material information about such matters, companies could use sustainability reporting requirements and guidelines. This takes me to the question about the interaction between the IASB and the work on management commentary, and the future work of the proposed sister board, the IASB, if it is established. The answer to this question is of course subject to many caveats. At the moment, it is an open question whether the new board will be established, as we are recording this webcast before the November 2021 United Nations COP26 conference, when the trustees have indicated they plan to complete this assessment. Assuming that the trustees announce the establishment of a new board, that board and the IASB will need to determine how they will work together. But it is clear from the responses received to the trustees' consultation over the past year that many stakeholders support the idea of connectivity and coordination between the two boards, and support connectivity between financial statements and sustainability disclosures. Both boards will focus on the capital markets information needs. Management commentary could be a good candidate for reporting sustainability information, because it could link sustainability information with other information needed to understand the company's ability to create value now and in the future. Given this connection, it would make sense for the boards to coordinate their work in this area, and the feedback received on the proposals for management commentary could provide timely input into this future work. With this, let me finish. I hope this webcast has been helpful to you in understanding why the board is doing the project and how it relates to initiatives in narrative reporting. Please join us for other webcasts in this series that focus on frequently asked questions about the board's specific proposals in this project. For now, thank you for listening.